After 15 years of working with American expats, I keep on seeing the same 3 mistakes, and they're costing people thousands, sometimes tens of thousands of dollars. And the worst part, people don't even realize that they're making them. Now let's get into it. Mistake number 1 is not using the foreign earned income exclusion or the foreign tax credit correctly. So the FEIE, foreign earned income exclusion, allows you to exclude a large chunk of your foreign income from US tax. The foreign tax credit credits you for taxes you've already paid overseas. So most expats qualify for one or both of these benefits. The problem? A lot of people don't claim them at all because they don't even know that they exist. So others claim them wrong, like taking the FEIE on income that doesn't qualify or using both in a way that cancels out the benefit. So let's get into an example. I work with a teacher in Singapore who overpaid about $30,000 over 3 years because her accountant didn't understand how the FEIE worked. And that's not a small number. Some accountants don't even think you qualify for the FEIE because you're over 35 days in the United States. Well, that's wrong. Because if you qualify under the bona fide residence test, like if you're a teacher and you're working in Singapore, you have a long-term lease, a local bank account, a visa, all these essentially tie you to Singapore. But even just because you go back to the United States for the summer and you're not working there, and you're there for over 35 days, because you're a bona fide resident of Singapore, you would still qualify for the foreign earned income exclusion and be able to exclude that income. Mistake number 2, not reporting foreign income because you assume it doesn't count. I hear this all the time. It's foreign income, so why would the US care? The US actually does tax its citizens on worldwide income, no matter where you live, and no matter where the money comes from. So that rental property in Portugal, it's reportable. That freelance work that you're billing in euros for some client in Europe, reportable. The pension that you're receiving abroad because you lived in Switzerland for 5 years and now you're eligible for that pension, reportable. I had a client who had been renting out her flat in London for 6 years and never reported it. She wasn't hiding anything. She just didn't think it applied because, of course, she's paying tax in the UK, and that means that because everything's over there, she doesn't have to report to the US. But that's wrong. Even look at former Prime Minister Boris Johnson. He's a US citizen because he was born in New York, but didn't realize that he had to report the sale of his London flat to the IRS, and eventually he paid a boatload of tax on that sale, and after that, he renounced. So the point is this. The IRS wants to know everything about what you do, whether it's in the United States or outside. So report everything first and use the exclusions and the foreign tax credits to reduce your tax liability. Mistake number 3, you assume that because you're an expat, you have until June 15th to pay, but you don't. Yes, it's true. Expats get an automatic 2-month extension, which moves the deadline from April 15th to June 15th. But interest on any taxes that you owe actually starts accruing April 15th. So a lot of people don't realize this until they get a notice all of a sudden that they have interest charges that they weren't expecting. And I've seen thousands of clients rack up thousands of dollars in interest simply because they thought that it was an extension to pay, but it really is only an extension to file. If you think you owe anything, pay by April 15th. You could sort out the exact numbers, etc. when you file, but get something in by April 15th to stop the interest clock. So these are 3 mistakes I see over and over and over again. Not using the foreign earned income exclusion or foreign tax credit correctly, not reporting foreign income, and confusing the filing deadline with the payment deadline. The good news is all this is fixable and most of it's avoidable with the right guidance. And we could even file an amended return up to 3 years and get money back. We've been doing this for over 15 years. We've helped thousands of expats that trust us with their taxes year after year. So any of this sounds familiar and you're not sure whether your situation is being handled correctly, let's talk. Links in the description. I'm Vincenzo Villamina, CPA and founder of Online Taxman. Thank you.